It's so nice of us to have Denise here from FNB. Denise, it's lovely to always have you on the industry pre-show. We like to get together at this time of year and just pick your mind about changes and things that are going on in the industry. And at the moment, one of the changes is with FNB. So how fantastic that we have you here, because recently there've been some rethinking about individualizing the processes for people who are coming through your department. And we're hoping you can tell us a little bit more about what you have in mind, and help us understand some of the reasoning behind it, and also just understand what we need to keep in mind when we're dealing with proposals that get sent to you. And of course, there are other credit providers who are watching, so they might be thinking, oh, I wonder what FNB are doing, and maybe they want to see what you guys have decided to do. So please tell us a little bit about what has changed and how it will impact us in the industry.
So thanks, Zach, and thanks for having me. Yes, so I think that one of the things that we've been talking about as an industry, and that we've been looking at, is these misleading practices, false advertising, and this roping people into debt review with either not understanding that they're applying for debt review, B, not explaining the consequences of debt review to clients, and then this incentivization of, you can save thousands of rand a month, or those kind of things. What we're seeing now from an industry perspective is the number of clients coming into the debt review process who have showed no signs of financial strain prior to the application for debt review. Not only that, but the number of complaints that we're getting from clients, because of course the first time they go and use their credit card and they can't use it, they're going, oh, what's going on? So the number of complaints that we're seeing on our side for clients who are saying, I wasn't aware of in debt review, I didn't know, we're seeing that significantly increase. And I think what we're trying to do is we're trying to say, how do we, as a responsible financial institution, deal with this, while still ensuring that the customers that do need assistance are being assisted. So it's that weighing up of the pros and cons, and that's what our approach is about, and that's what we're busy looking at.
Okay, well, let's dive into it a little bit then. Maybe, so now we have an understanding that there is this concern, I think, across the industry that people are being induced into debt review. Like you said, one, not understanding, or two, kind of not even being aware that it's debt review, yeah. Which is terrible because, of course, debt review is a wonderful product and it's like a wonderful benefit with a few, some medicines have a few side effects. So debt review is good medicine has got a few side effects. So it's just nice if you're aware of that, right? Okay. Two things are mentioned in your correspondence right near the beginning that you've shared with everybody. Thank you very much for sending that out. It's so nice. The communication channels are open and we love that in the industry. You mentioned a little bit about some guidelines within the task team that you think were maybe not being adhered to, and maybe you'd like to, share a little bit about that too.
Yes, and Zach, it's in line with what I was saying before. I think there is a responsibility on debt counselors to ensure that the people that they're assisting are over-indebted consumers. That's the purpose of debt review. Debt review is there to help people who are struggling financially. That it's not there to save money on a monthly basis. We all want to pay less for our debt. That's not what debt review is about. Debt review is about helping people who need help. And unfortunately, when you start flooding the debt review industry with people who A, don't need help, B, don't necessarily understand, what we're doing is we're creating this negative sentiment. And I'm sure everybody has seen Maya Fisher-French has done a lot of articles on debt review and terrible stuff, and the NCR has come out with regards to the misleading advertising. And I think as an industry, we need to work together to ensure that we just clean up our act, right? So I set out the task team rules, but the fact of the matter is there is a responsibility on debt counselors to ensure that the people that they bring into the process are clients who are experiencing financial difficulty, who need help. That's all we need. So that's my task team in a nutshell.
Yeah, because I suppose otherwise people will say, oh, but the task team is this, or the task team is not that, or the court's like this. But you're saying this is just the real purpose behind what we're trying to do as an industry. So that's really the heart of the thing. Okay. All right. So tell us a little bit about how you intend to go about individualizing your responses to proposals that you're getting. Because over the years, what often happens with the credit providers, we start to get a feel for how you will respond. And that's, I suppose, a skill that we develop over time. But just to preface this, that we're not talking about DCRS, because DCRS is in a box. It happens, that sort of stuff. And it's more kind of like, is it right? Okay, click yes. So we're not talking DCRS, we're talking about kind of pro rata stuff or something that falls outside DCRS. What are you thinking about how you can individualize your responses for each consumer coming through the department?
So Zach, with all proposals, there's three main areas that we look at, and we always have, and we always will. But I think it's important that we just pause on them a little bit. So the first thing is affordability. Income and expenditure is very, very important. Those inputs determine everything else. We are going to be interrogating those line items a little bit more, in line with what is, and there are lots of guidelines with regards to what's reasonable, what isn't reasonable. It's not about getting into the nitty-gritty too much as saying, if a client's net income is X, that's the amount that they get into their bank account. There's some wonderful debt counseling systems where you input the gross and it derives a net, which is then completely different to the actual money that goes into the client's bank account, because that's actually where it should start, right? So I think for guys who have those kind of systems, those are the kind of things we're going to be checking. The amount available, or the available income for clients has got to be right to start off with. It's got to be right. Expenses are always a little bit more difficult because it is always subjective. However, as the bank, where we do have, the prime banking relationship with our consumers, we do have a pretty good idea of monthly expenses. There is also, like I said, in various documentation, there are reasonable expenses matrices and that kind of stuff. So we're going to be looking at those, but I don't want us to get too much on the line item by line item, right? That's not where our thinking is. Our thinking is, for this particular client, what is a reasonable amount of expense? If you're saying that you're struggling financially, because that is your first port of call. Your first port of call is get your budget in order and start spending right. Right? That's for all of us, whether we're over indebted or not. The second thing, of course, that we've always had a look at is term and interest rate. Now, we are clamping down significantly on the term. For those of you who shorten the term, we won't accept. We are not accepting unsecured terms of less than 60 months, unless it's the small balances. And guys, once again, there's guidelines on what the small balance is and what their term should be. We're not talking about those. We're saying, don't come here and tell me that the guy's going to pay off 100,000 Rand personal loan in 40 months and he's over indebted. Please don't. That's not how that works, right? The first thing you do is you extend the term. That's always been the rule. We're going to be enforcing it. We need to make sure that that is what needs to happen. And then the last thing is the interest rate. Now, what we've seen is everybody goes down to the lowest common denominator. We all know what our acceptable interest rate is, what our minimum is, and that's where we go, or lower than that. And what we're saying is not every single consumer needs the same amount of relief. That's why you end up with a 40-month repayment term, because you go down to the absolute minimum, and now all of a sudden, the guy's happy and smiling. That's great. But there are customers who need real relief, which is why also that our minimum interest rate didn't necessarily always make sense. But then everybody has to stick up their hand and come to Denise and say, this client really needs more help. So what we're saying is the more relief that a customer needs, the more relief they need to get. But everybody doesn't need the same amount of relief, right? It's subjective. It's based on your situation, what your income is, what your expenditure is. And what we're trying to do is we're trying to ensure that the people who need more help can get the more help, and the people who need less help get less help, right? So we're trying to pitch the help at each individual customer's actual situation.
Okay, excellent. So individualization rather than the cookie cutter approach. And as a debt counselor making the proposal, you need to keep that in mind. Now, we at this stage are going to be starting to send you stuff, and then you're going to start sending us stuff back to say, no, we think this. So there's going to be a period of transition where this is going on before we start to understand externally what's happening internally. How do we deal with that? Because what if our computer doesn't quite make allowances for that immediately when we're sending the initial proposal?
So Zach, I think the big thing is that we don't want to disrupt the whole industry. We don't want to disrupt the whole debt review process for clients who are experiencing difficulty. That is not what we're trying to do. So what our approach is going to be is we're going to facilitate proposals. So assuming that the affordability, income, and expenditure is correct, we will have a look at the amount that is being offered to us, and we're going to try and work around that. We're going to assume that you, as the debt counselor, has done yours. And if you say they can pay 500 Rand for this credit agreement, we're going to take that 500 Rand, and we will then extrapolate the term and the interest rate. We will do an acceptance so that you don't have to go and try and redo your proposal and try and get all your systems to then sync with ours. We will send you an acceptance of the installment amount with the interest and terms possibly changed. Please do have a look out for that. The fact that we've accepted doesn't mean that you guys now have to adhere to that. So I'm not trying to dictate an arrangement or an agreement. What I'm trying to do is get an agreement on our side so that we can do the restructuring, that kind of stuff. If as a debt counselor, you don't agree with what we've come back with, that's fine. We can go the court process. You go to court, we'll have the argument. It's fine. You can still go with your original proposal. But it just means that from a consumer perspective, while we're all trying to figure this out, the account would have been restructured. So that long wait for, court dates and that kind of stuff is not going to, negatively affect the consumer too much. So that's what we're trying to do. So we're going to facilitate agreements. We're not imposing our will, please. That's not what we're doing. There is still the court process. The reason why we're doing it is because to try, you can decline and counter, but then to try and get, and we all know that, right? Because we've all lived this hassle, to try and get your actual system to actually replicate exactly what we want is very difficult. So we're just going to do an acceptance. We're going to change possibly one or two of the terms, or both the term and the interest rate. Have a look, check it. If you're not comfortable, we'll go to court. We'll have those arguments in court. We're not trying to increase the court matters there as well, but we're saying there is an option for debt counselors who are uncomfortable with our approach to their particular proposal.
Are you anticipating that some of the workload internally will shift to the legal side just as a result? It might be a natural consequence of making this kind of change, that some of the work that was done in one place will end up being done in a different place.
So Zach, that's always one of the possibilities when you change a process. But I also do foresee that it would probably be of a short-lived period, right? Because this is what happened, and we've gone through these cycles a couple of times within the industry where we go, we litigate, you get some sort of guidelines, guidance, you get some sort of case law, everybody then sort of understands how we need to deal with this stuff, and then proactively it sort of gets done so that we don't have to go to court to deal with it, if that makes sense, right? So that's kind of, it will probably increase our court applications in the short term. We don't foresee that it will be a long-term thing, because we think all parties, ourselves as well as the debt counselors, will start getting some clarity as we do move some of these things, and then it will settle down again, right? And we'll all sort of, hopefully move on. That's the plan.
Absolutely. Okay. And so if I'm sitting in my office, I should be expecting a lot of acceptances. But when I go look at the term, I'm probably going to see 60 months quite a lot. Somewhere up to, I mean, you guys are very generous and all the way up to like 96 months, some amazing things.
Yeah.
Sometimes it really, really is fantastic that the concessions that you're happy to make for the consumer. So well done on that. That's kind of what I should anticipate, perhaps.
Yes. So where a consumer can't solve in 60 months. So we're saying it has to be at least 60 months. Where they can't solve in 60 months, specifically on unsecured debt, we all know there's I know they call them jumbo loans, but I don't think it's necessarily just a loans thing. I think that, and the task team is being revised and all the rest of it, but debt sizes are just bigger than they used to be when we initially did it, right? Having a credit card of 50,000 Rand is kind of a normal for a middle income kind of a person, right? Whereas when we initially did DCRS, and then it was like 25,000. So the change, so we have to be mindful of that. You know, the rules that we did at the time that we did them made sense. So we're saying 60 months minimum, but it doesn't necessarily solve. I mean, the price of cars, you know, it has changed so significantly. So we do understand that there does have to be a bit of a shift, and some people need longer to you know, really sort of rehabilitate. But what we don't want to do is we don't want to prejudice those guys, because those are the guys who really need the help, right? We don't want to prejudice them with sort of a standard interest rate. For those ones are the ones where we're going to go lower. So the more help you need, the more help we're going to give you. So we're still prepared to go down to 0% interest rate on certain customers, but we want those to be the customers who really need the help. So that's where our mindset is at.
All right, and then I'll throw one more thing at you before we kind of finish up. When we make changes like this, I suppose we've got to also look ahead in time, 60 months, and think, are we going to hit some end balance differences because systems are running certain things at different percentages? Hopefully along the way, we'll pick it up and we'll kind of do some corrections. But do you think that might also be something that just kind of happens naturally as a result of maybe two systems running with different interest rates at a particular time?
So Zach, it may be, though. I'm really hoping that it's going to be the exception rather than the rule. So where the exception would come in is where we believe that the term hasn't been extended as far as it would be, and so we can charge a higher interest rate. And the DC then says, no, I don't agree with that. I don't think that's fair, and we're going to court. We will then restructure in terms of our reduced interest rate. The DC at that stage would probably be having the interest rate running on a lower interest rate. So there may be some end balance differences as we go through the process. So as the court orders come in and we get something, you know, I think that just proactively we need to then just sort of reach out to each other and say, okay, right, this is now what the court decided. Your balance is X, my balance is Y. Like, how are we going to deal with that going forward? So we want to proactively try and sort of mitigate that. You're always going to have end balance differences, right? And we've spoken about it for years, and there's always, because PDA pay over dates and that kind of stuff. So there's always a little bit, but what we don't want is a big difference at the end of the process. Those ones, and we do send out, guys, we send out our balances on a weekly basis now, proactively. So please, we do that for a purpose, and the purpose is that we can proactively deal with balance differences so that we don't get to the end and the consumer is like crying because they think they're supposed to get a clearance certificate and we've still got a whopping balance on our side. So yeah, so that's the purpose of it. That's still going to continue. So anytime we see, you know, sort of a big difference or a big shift in the movement, let's just proactively deal with it, and let's not wait till the client has got getting a clearance certificate and then they're not, and that's disappointing.
Yeah, no, that can be traumatizing, right? Okay, so what we're saying once again, just to highlight the thought, it's not related to DCRS matters. They're an entirely different thing. Their counsellors are not being dictated to by you. If they're unhappy, there's always the court route is always available, and the courts can help us sort that sort of stuff out. And you're looking at these three main areas of affordability, term, and rates, but looking to really make sure that the figures we're all seeing are the same, and that you're individualizing responses rather than kind of some sort of global cookie cutter approach. Is that a decent summary of the thoughts?
That's a great summary. Thank you.
Okay, right. Well, we look forward to seeing how it plays out over the next few weeks. We're all nervous when there's changes, of course, because sometimes
Yes.
change is tricky. But it does look like you have your processes in line. You've got everything set up, and we'll just start to keep an eye out on those acceptances that come back to make sure that we're accurately capturing everything. And if we agree, we're going ahead. So thank you, Denise. We really, really appreciate your letting us know a little bit of insight into what's happening on your side at the moment.
Oh, thanks so much, Zach, for the opportunity. It really, it's always good to engage in this industry. We've come a long way, and we know what happens when we stop talking to each other. So I try and communicate as much as possible. If there are still questions and that kind of stuff, please, we do have processes in place. Set up a session where we're comfortable, whether it's on an association basis or a firm basis or whatever that may be. We are comfortable to engage and to discuss. And we have notified the NCR as well, so we will be taking them through some of our thinking as well. So it's just about making sure all the stakeholders understand what we're doing, why we're doing it, and that, and if we agree, then how do we disagree in a way that doesn't prejudice our mutual customer at the end of the day?
Yeah, absolutely, because essentially we're trying to get them the most personalized approach to their debt situation, and we can see that you have that in mind now, and we'll make the adjustments. We'll figure it out as we go ahead in a couple of weeks. In fact, probably in a week's time, we'll have all figured it out. But we really do appreciate your kind of sharing your insights on it. Thank you very much, Denise.